Estimated taxes were never something I had to worry about when I was working my corporate job. I got a W-2, I paid my taxes at the end of the year, I had taxes withheld from my paycheck because that's what you do when you have a W-2 and you have a normal paycheck as an employee. And it wasn't really until I started working for a small business and then I had my own business that estimated taxes became a huge part of my life. So, they might be part of your life too if you're a small business owner, and that is what this channel is all about. We're trying to help small business owners with their financials. So this video is all about helping you calculate and helping you understand estimated taxes and estimated tax payments. All right, so if that sounds interesting to you, this is a video that is meant to be timely. We are in January, we are at the beginning of the year, and there is always an estimated tax payment deadline in January. So that is why we are putting this video out. Hopefully it's timely for you. So stay tuned if you need any help on estimated tax. So with that being said, if this is the type of information that you need in your business, please, please, please go ahead and subscribe to the channel, because we are going to keep bringing this type of stuff and hopefully try to make it as timely as possible. So also make sure you click the little notification button so you know when things come out, because I do try to make them timely for what's going on in the world. All right. So, okay, well, let's just go ahead and talk about estimated taxes. So what are estimated taxes? Why are we even bleh. Like, it sounds kind of boring, right? Estimated taxes are already boring. And then now we have an estimate to add on to them. Well, estimated taxes are just kind of part of what we have to do as small business owners, because when we make money, especially when we make profit, we are going to owe taxes on it. And the IRS has this pay-as-you-go system. They don't like the idea of you making tons of profit and then a year or two down the road, when you actually get around to filing your taxes, you remit the taxes to them. They don't like that. You know why? Well, they like the timeliness of when the profit is earned or when the money is earned to when the taxes are actually paid. So they're trying to get those time periods to match up much more closely. But they also know there's a big burden associated with figuring out your exact profit and then remitting taxes. So what they've come up with is a system that we can assess how much money we think we've earned and then pay an estimate. And then it doesn't actually have to be trued up 100% until you actually file your taxes. Okay, so we have some minimums that we have to reach. And really with the IRS, the big thing is that they want you to be paying something in. They want you to be trying to pay the right amounts. Okay, so that's what we're going to help you do today. And I've got an awesome spreadsheet that will be available in the description box below, but we're going to get into that in just a little bit. Okay, and so I also want to say that this is like not tax advice, you guys. What this is it's guidance, and I'm helping you understand some of the IRS forms that they have that's supposed to help you. But even when I go and look at these forms, like the 1040ES, it's still kind of confusing. So what I tried to do is break down that information and give it to you in a really like easy, digestible format. And then the spreadsheet that I have actually will do the calculations for you. So we're going to talk through that today. So the biggest group of people that need to pay estimated taxes are business owners. So like I said, if you're earning a W-2 wage, you're probably having some taxes withheld from your paycheck. Hopefully you've calculated what you need to cover those wages and you're fine there. But you might be earning other profits in business or even from other things that you're doing where you might need this concept of estimated taxes. You might need to pay more in than just what's being withheld from your paycheck. Now, if some of you who are S Corp owners, you're probably paying yourself, you should be paying yourself a W-2 and taking a distribution from the profits of your business. So we're actually going to go through an example of an S Corp owner that kind of has both, which will sort of give you an example of what's going on here, and some things to think about if you need to make estimates like that. All right, so when you're making estimates, we are thinking about, we're trying to sort of predict the profit in our business, and that's kind of hard to do. So the IRS gives you options, and they say you either need to pay 100% of what you paid in your last year's tax liability. So you might have paid all in, maybe even you and your spouse all in might have paid $25,000 into the IRS. And so what they're saying is they expect you to pay in the next year at least that same amount of taxes, or they want you to estimate and get close to what your actual tax liability will be. And you need to be within 90% of what that actual tax liability is. If you don't hit those two thresholds, either one, and you can take the minimum, and we'll talk about that, but if you don't hit either one of those thresholds, you could be penalized. Okay, so if you pay no estimated taxes whatsoever, and then you just get around to your tax return and you could be hit with a penalty, you probably will be hit with a penalty. So please, please, please make sure that you do not get hit with IRS penalties. They are a pain to deal with and you just don't want to be there. Okay, so let's try to avoid those if at all possible. All right, now one caveat to that is that if you are a high wage earner, you earn over $150,000 annually, you have to, instead of 100% of last year's tax, the minimum is 110% of last year's tax, okay? So they do wanna say, hey, pay us more. So this is kind of the situation where you have to decide, and this is where strategy comes in. You have to decide, do I wanna just pay what last year's tax was? Or do I want to try to do the work to try to figure out what I think my actual income would be, and I can try to get closer to the 90% rule. And so this really helps when you have, let's say you have an earnings trajectory that's going up and you know that you earn more this year than you did last year. So if that's the case, you might want to save cash and just pay last year's taxes and say, okay, I know I will pay 100% of last year's taxes. I want to save my cash right now. I don't want to pay it out to the IRS right now. So I want to save it and I'm going to try to, I'm just going to use last year's taxes for my estimated payments. Now, you might be in an opposite situation where you're like, oh my gosh, I have so much money. I don't want to hold on to this. I'm going to burn through it if I hold on to it. So in that situation, you want to try to pay closer to your true liability in the current year. Okay, so this is about knowing yourself, knowing what type of business owner you are, and also knowing what you would prefer. Would you rather hold on to cash now and maybe you're doing something with it, you're being productive with it, or would you like to go ahead and get it paid out to the IRS? Okay. Another situation that we've had, especially over the pandemic, is when somebody's earnings were higher, but their actual profits during this pandemic time have been really low or even at a loss position. So in that situation, you wouldn't want to pay last year's taxes because you could be having to pay out tons of cash when you know your tax liability is actually going to be zero because maybe you're in a loss position. Okay, so in that situation, you want to estimate closer to what you believe your taxes will be, and then you can pay based on that. Okay, so there are some years, and I've had clients where we say, hey, we actually don't have to estimate any taxes right now because you are in a loss position. And so we just kind of do that on a regular basis. And I say, hold off, don't pay those payment coupons that your CPA gave you because that's just cash that you're going to get back in a refund. And we need the cash now, So that's something to think about. So you can think about what is your situation and you have options of what to do. But what I am going to help you with now is we are going to get into a spreadsheet, and this spreadsheet is basically something that I've created, and what I've tried to do is make the 1040ES easy. It's like a fillable form. I've got all the information you need for your taxes. I've got a calculator so you can figure out what your tax rate is with the tax rate schedule from 2021. And we've got kind of an estimated one for 2022. We'll have to do another update once they finalize that, but we've got a lot of the numbers in there, but I'll show you guys that. So this spreadsheet is available for download and it is just a few bucks. So if you want to grab that from my website and make it easy peasy on yourself, check it out in the description box below. So let's go ahead and get into it. Okay, so here we are in the spreadsheet, and this is our estimated tax payments and tax rate schedule for you. And so you'll note up here that this is all based on this form, the IRS form here. You can go ahead and copy and paste this, and we can show you this is available on the IRS website. And it is lots of lovely tax guidance, but we
kind of wanted to simplify this for you guys and make it a little bit clearer and also just give you the calculations because half the battle sometimes is just figuring out what exactly it is um, that these people want from us. So what I have here in this spreadsheet, and I'll just kind of walk through it real quick. We're going to walk through an example here, and then I've given you a completely blank one here. And then so you can calculate this for yourself. And then we have a way that you can just keep track. This is a little schedule based on what the IRS has of keeping track of your estimated tax payments. And then here is just a reminder of the upcoming due dates. And then here's the self-employment tax calculation that we're going to walk through. And actually, we'll do this really briefly. The tax rate schedule. So this is actually fully calculated for you. This is something that they have here. This is updated every single year. So this is the one to use for your 2021 taxes. So that's where we're going to go through here, and I'll show you how to calculate and where you need to go and how to use this table. And the on this tab, we have the 2022 tax rate schedules. So you can use these schedules to estimate 2022 taxes. So let's go ahead and get into the example. So the example that I have, I've left it blank and we're going to fill it out together. So the first thing that we have here is we have a couple, and this couple is married filing jointly, and they own, one of the spouses is the 100% owner of an S Corp. Okay, so both spouses are earning W-2s, and they're actually both earning $100,000 a year. So one spouse is just employed by somebody else, and then the other spouse is owns the S Corp. All right. And then the S Corp paid the spouse W-2 wages. All right. Because remember, we're supposed to be paying our owners of S Corps reasonable compensation. So they got that on a W-2. And then the profits of the business were $50,000. So I'm putting all these things here. This is going into, and I'm going to show you this real quick. This estimated tax worksheet is basically what we're filling out. So that's what these line reference numbers are, okay? But I'm just putting it over here. So this is added up. Our line one is $250,000, and we're just going to go ahead and have them take the standard deduction. So that's 25,100 for the year. And then we went ahead and also calculated a 20% QBI deduction. So based on the income of this couple, they're allowed to take the QBI deduction. So if you don't know what that is, talk to your CPA, make sure that that is being calculated for you. All the software now calculates that, so I can't imagine that somebody wouldn't be taking it, but that is still in place. So let's make sure that you take that. And then remember that everything yellow is where you put inputs, okay? So everything else is just a calculation. You can also, this is calculated actually, so we can potentially put that as a yellow as well. All right, and then this basically just gives us kind of our expected taxable income, okay? So $214,900. And what we're going to do now is we're going to go to line 4 and calculate the tax. So $214,900, let's remember that number. We're going to go to our tax rate schedule, and we're going to go to this married filing jointly schedule. Okay, this is huge that you pick what type of tax filer you are. Are you single? Are you married filing jointly? Married filing separately? This is huge because it changes the rates, okay, and the thresholds. So what we're going to do now is we're going to find the range that this taxpayer is in. And so they are over 1,672,750, but under 329,850. So what we're going to do is we're going to type in the amount of taxes. So, or the amount of taxable income. So 214,900, I'm going to type that into the range here. I'm going to type it in, and this is my tax. So I have this calculated for you guys. All right, so what we're going to do, and I'm just making this easy on myself, I'm making equals and then putting it over here. 39,618 is my tax. Okay, so on $214,000 of income, I've got a $39,618 tax liability. Okay, now then it gives you options to put in AMT, which is the alternative minimum tax. We're not going to use that because not everybody has that, so we're going to leave it out. This is going to be a pretty plain vanilla kind of situation here. All right, and then we're getting to line 7, and then it says add any other tax credits. Okay, we don't have any of those. It's giving the option then here to add self-employment tax. That's what SE tax stands for. So because this is an S Corp, we do not have self-employment tax. Now, if I changed this and said, hey, this is not an S Corp, and we've got $150,000 of sole proprietorship earnings, then we would need to go over here and calculate self-employment tax. So we'd go over here, we'd say 150,000. We would, this is all calculated for you. It'd have zero earnings subject to Social Security for this individual. And then this would basically calculate our self-employment tax for us here. Okay. So that's something that you can use. We're not going to go much more into detail on that, but that is the calculator already and set up for you. All right, and then we've got any other taxes that need to be added there, and then we will sum between the tax that we pulled from the tax rate schedule plus any self-employment tax, and then plus any other taxes that may be there. When we go to this, it will potentially say, see instructions. So you can look at the instructions. These are not going to, like the other taxes are not going to apply all that often to other people, but it is an option to have it there and add it in, okay? So this is basically leading us to line 11C, and what this is saying is it's saying, hey, this is what we're expecting the tax liability to be for the current year, okay? And so these W-2s is what we were expecting our W-2 wages to be, and this is what we expect our S-Corp earnings to be for the whole year, okay? So this is what we expect our tax liability to be, this line 11C. Now we have to determine how much do we actually need to pay the IRS, because remember, we don't need to pay in our estimated taxes 100% of what's due. We have options. So we're going to go ahead, and I have a little side chart over here, and this couple happened to have paid $35,000 last year into taxes. And so I went ahead and calculated them at 100 and then 150, but we're actually using their higher 110% over here. So this is saying what is 90% of current year taxes is 35,656, but what is 110% of last year's taxes? This is where we do the test. We say which one is lower, and that's the one that we're allowed to pay, okay? So the one that is lower is actually 90% of this year's tax liability is less than the 110% of last year's. So what this individual couple needs to have paid in by the end of the year in total tax, whether it's withheld from their paycheck or it's paid in estimated taxes, they need to have a total of 35,656. So it just so happens that they already had $30,000, or they will by the end of the year have $30,000 of income tax withheld from their paychecks. They set their deductions up for this. So, this means that the remaining due is $5,656. So this couple actually had $30,000 withheld from their paychecks already, or they will by the end of the year. And so that means that their remaining due that they're going to have to come up with for their estimated taxes this year is $56.56. All right. And so this is saying basically that they will have a payment required, and then this is calculating what that would be in 4 equal installments. All right. Now I have 2 little calculations down here. If let's just say that we got to the end of the year, let's just say that they've made, this is January, and the Q4 estimated tax payment deadline is coming up, and they have made 0 estimated tax payments. Maybe this couple just found out that this is something they have to do. If that's the case, they can go ahead and make the full payment in their Q4 payment, and they may have missed these other installments. Ultimately, that's not a huge deal. It's more about, do they get the full payment in by the deadline date of the Q4 payment? So, or maybe at the very beginning of the year, they had a refund of $2,000 and they decided to roll it into their next year's taxes. If that's the case, then we would just true it up, and the remaining would be $36.56. Okay, so take out whatever has already been paid year to date. Maybe this couple was on it, they calculated this, and they've already made 3 payments of $1,414. That means they just have one more payment of $1,414, okay? So this is how this little calculator works down here. And this is something that I added. This is not something that's added in the 1040 ES, all right? So because oftentimes what happens is somebody will miss a payment, or they will potentially not make any payments. Maybe they weren't profitable until Q4 of the last year, and that's when most of their income comes in. And so it's okay to kind of do this true up at the end of the year, all right? But the purpose is to try to more closely match. So if you earn more of your money in Q1, to make sure that you're paying estimated taxes on that quarter, and so on and so forth, okay? Remember that pay-as-you-go system with the IRS. Okay, so this is how this worksheet works, okay? So hopefully this is really helpful to you. I really want you guys to use this tax rate schedule. Let's just go through a couple other examples. So let's say if you were single and you were making $50,000 as a self-employed individual, you would put your $50,000 here, and then this would calculate your tax. Let's say you're head of household and you're making $250, you would put it here. Oh, that's 25. You would put it here, and then it would calculate your tax of $28,450. All right, so make sure you are using the proper filing status, and then make sure you're using the proper range and get that into the right line, okay? So I tried to make this as easy as I can for you guys. These tax rate schedules are not super fun, but at least the calculation is done for you here. And remember, this is for estimating 2021 taxes, and then we will move to the 2022 tax rate schedules. So yeah, go ahead and use this to calculate your estimated tax payments. Remember that you can record your taxes paid, copy this spreadsheet, put it somewhere where you need it. If you need to print it out and put it on your wall, whatever you need to do, go ahead and do that. And then just keep in mind, get these dates on your calendar. Make sure you know when these taxes are due. And here's that place again where you can calculate self-employment tax. If you are filing a Schedule C and you are subject to self-employment tax.
Okay, you guys, well, I hope the spreadsheet was super helpful. Feel free to recreate it yourself if it's something that you want to go and do. The 1040 ES is available. I put the link in the description box below if you want to go and grab that. But also, if you just want to grab it for a couple bucks, it is available on my website, so feel free to get it there. All right, you guys, well, thank you so much. Happy estimating. I know that estimating taxes is a little bit of an art and a little bit of a science. So I've tried to give you guys what you need in order to finesse and try to figure out what is the best for you and your business, and also while keeping the IRS happy, okay? All right, well, thank you guys so much. Have a wonderful day. Bye.